Senator Van Hollen. Senator Hagerty from Tennessee is recognized.
Thank you, Mr. Chairman. Ranking Member Toomey, I appreciate your holding this hearing, and I want to congratulate Chairman Powell on being renominated to be the chair of the Fed. Thank you for your testimony and your presence here today, Chairman. First, I have just a quick housekeeping question for you. I think I know the answer to this, but as a matter of fact, have you ever embellished your resume, your record, your publication history?
I don't think so.
I did not think so. Thank you for clarifying that for us. I'd like to turn to the topic of quantitative easing for just a minute, Chairman Powell. When Chairman Bernanke first introduced quantitative easing back in 2009, he assured lawmakers at that point that it would be both temporary and rare. Essentially, it was introduced as an emergency measure. Do you agree that that quantitative easing should be both temporary and rare?
I agree we shouldn't use it unless we need to, but I will say it's going to depend to some extent on where interest rates are. We've been in a very low interest rate environment even during good times all over the world, and when that's the case, we don't have a lot of ammunition to support the economy. So I can imagine a regular garden variety downturn, which we haven't had in a long time, in which we didn't need to resort to quantitative easing to asset purchases, and we then wouldn't. But in a world where you've only got a couple hundred basis points to cut, you may need to do that, because what that gives you is the ability to move longer run rates down, not just at the short end.
I understand, but I just remain concerned because here we are 12 years later from its first introduction. The Fed's balance sheet's nearly at $9 trillion. We're continuing to grow it, albeit at a slower pace. So it remains a real concern. You said earlier to Senator Shelby that you think the Fed could begin the process of normalizing its balance sheet later this year. Can you provide us with a little bit more clarity on this process, how soon you think this would begin, and whether you'd consider actively selling securities rather than just letting them gradually run off the balance sheet?
So this is we had our first discussion of this set of issues at the December FOMC meeting. We'll talk about it again at the January meeting in a couple of weeks. Haven't made any decisions. This time is going to bear some similarity to what we did last time, but it's going to be different too, and that's already clear in that we will have the ability to move sooner and to move a little faster than we did last time. So more clarity is coming, soon on that, but I don't want to get ahead of the committee. In terms of selling assets, we haven't made any decisions on that. We didn't do that last time. We never ruled it out either. Mm-hmm. So it's just something we'll be looking at. The balance sheet's a whole lot bigger this time, and also the duration is shorter. So it's a different, and the economy is much stronger. Yeah. So it's a very different situation.
So I'd like to come to the question of governance, if I might. While you've been nominated to remain chairman of the Fed, the Biden administration's 3 proposed appointees would, together with the nominee for vice chairman, who we will hear from this Thursday, constitute a majority of the Federal Reserve Board. Looking recently at the 5-member board at the FDIC and what happened there. There at the FDIC, a 5-member board overturned 88 years of tradition and independence with Biden political appointees led by CFPB Director Rohit Chopra forcing out the FDIC chairman before her 5-year term was up, strictly for partisan reasons. This incident causes me to worry that an activist bloc at the Federal Reserve Board could sideline you. They could exert their authority while excluding the full FOMC membership. So my question for you, Mr. Chairman, is the Fed vulnerable to similar unfortunate, politically motivated hijacking of an organization like we just witnessed at the FDIC, and what could this committee do to prevent it?
First, and you'll know that I don't have any comment at all on the recent events at the FDIC. So at the Fed, monetary policy is conducted by the Federal Open Market Committee, which includes the 12 Reserve Bank presidents, and in total there are as many as 12 voters. Yeah. So we'll always have a balance of governors and Reserve Bank presidents. Regulatory policy is really the business of the Board of Governors, and there are as many as 7 governors and a majority is 4. We do have a history at the Fed of working collaboratively and coming together and getting consensus on issues, and I would hope that certainly is my intention, that is my nature, and I will work hard to make sure that things stay that way.
And as a member of this committee, I'll work hard to support you in that, to maintain that posture as well. Thank you, Mr. Chairman.
Thank you.
Thank you, Senator Hagerty. Senator Cortez Masto from Nevada is recognized from her office.
Thank you, Mr.